Hello, it's Ron Video here. So I do want to do a little trading video. It's difficult to talk about trading and when you're trying to kind of teach people in a way because you don't know the level of the person that you're talking to. You don't know what they know, But that's in some ways that's how you get there with it. You can't know everything at once, obviously. But every time you want to know everything at once, so you try to figure it out, and all the bits come together. They're just like a jigsaw, and I'm rubbish at jigsaws. I've got no patience. As a kid, I was very much a one narrow-minded kind of person, really. I thought I was a bit, had the genius as well, obviously. But as you get older, you get more multifaceted, don't you? You can do a mathematical equation in one part of your mind, and then you can do another task in the other part. You can do two things at once. Well, I found that anyway. So instead of playing on a, one-string guitar, I'm playing on a, 2, 3, 4, 5-string guitar, 6-string guitar would be it is 6 strings, isn't it? Yeah, E, B, G, D, A, E. Anyway, trading. So, God, it's so fun trading. You tell people about trading. It sounds boring. It sounds like, you've got to do all that research. You've got to do all the back legwork. But it's basically the opposite of that. It's like just playing a computer game. But it's a little bit. Basically, it's playing a computer game. But you have to. What it is that when you finish trading for the day, you can literally forget about it. You don't have to be thinking about stuff. But as the market opens, this is if you're trading equities, which is nice. It's actually nice to trade in this kind of way where with Forex you'd have 24-hour access, But with this you have to be disciplined enough to be able to wait for the market to open. But it's good because as you go on week by week by week by week by week, looking at the markets, looking at stocks, trying to take trades, trying to hone your skills, and you get more excited about it. Anyway, I've lost my train of thought there. But what I'm saying is, during the day, as the market opens, then you start getting into it. So it's 11:28 a.m. in the UK here. And the market opens at 2:30. Pre-market is 2 o'clock. So at 2 o'clock, that's when it starts. Pre-market, 2 o'clock. That's all you need to be there for. The trouble is, if you come later than 2, is that you kind of miss a bit of it. You miss because you want to be on the same wavelength as everybody else. In a sense. But it's not that you want necessarily be on the same wavelength because you need to be on an upper wavelength. You need to be on a higher plane, so that you're the eagle and you take down and you take the peaks out. You get the lion's share. so you have to get the feel of the market. So at 2 p.m. generally go to Market Watch. And not because that's how I do it. It's just the way that I've been groomed. Out of all the information I've got. I don't have Market Watch or the news running. I don't have a live news feed when I'm trading because it's you just get these segments like Bloomberg, for example. If you have that on while you're trading, basically you've got some idiot just talking, or someone that not necessarily some idiot, but just something that you're not concerned about. They do a segment, like a 20-minute segment on the state of, China's oil industry or whatever, I don't know. Don't ask me. I'm not supremely knowledgeable. But all I'm saying is that it's unnecessary information, and you tend to find yourself listening to stuff that you just think and then disagreeing with or having opinions about stuff that is not related to your trading, So at the end of the day, the markets, they either go up or down, and that's it. It's either a good time for that stock or a bad time for that stock. But okay, that's because like people would say, oh, it's binary. you got binary options where you just click a button, don't you? Click, 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 click. You want to do it that easy. And the funny thing is, is that when I started out, I wanted that because I wanted to copy someone else's trading. And anyway, I just learnt it by getting into it. But anyway, so you go to marketwatch.com. So let's just go through a day here. So I want to go through a day, and I want to actually give you some practical ways of looking at. Well, I just want to try to give you some insights. I won't say of what I do, the way that I prefer to trade, but no, I'm talking about actual insights, because what you're making decisions based on definite information that's in front of you. Not just a hunch. Not a hunch at all, but information that you've gathered over the day. That's what's important to start too, because then you gather the information. You know where the markets were at 2 o'clock. So, for example, this is Europe. You know where the markets are at when they open. You're there. And news events that are happening, obviously you have to be aware of the news, but you don't need to listen to a news feed. Well, I feel that is the way anyway. I'd rather not listen to a news feed. I'd rather just know about bits of news information. So if the President of the United States is going to make a speech, or the Fed are going to do I don't really understand, a lot about economics here, but it doesn't really matter, because I'm trading these equities and I do understand how they move, I do understand where I'm going to have... Basically, if I'm not, if I don't know where that stock's going to go, obviously I'm not going to take a position. I'm only going to take a position if I really, really strongly believe that is going to make a move in the direction that I think it's going to go in, and it's worth doing, Everything pans out, the time frame, the stop loss, but that's complicating it as well, because it's very natural, free, easy, fluid activity, and the more you make yourself anxious. So I can give you a parable here. So when I was playing poker, there was an advertisement for and poker is, it gives you massive amounts of anxiety, because you're always battling other people. You're always in a conflict. It's different about trading. You're not in a conflict. You're trying to be in harmony. So, but this is an example, okay? So with poker, you're always in conflict with others. And this guy, he was trading like 30 tables at the same time, and he turned a small amount of money into a big amount of money. He'd had like maybe a couple of million or something from a small amount of money, but he was an absolute nervous wreck. I've never seen anything like it. He was shaking. His face was all mangled up. He looked like an absolute wreck, And that's because he's doing it, but it's destroying him at the same time, because he doesn't have that magnanimous floaty above, So what would you rather do? Would you rather succeed and be joyful and probably do better if you're feeling good all the time, and feeling positive and gaining psychological skills which help you to, not make it a grind? Because if it turns into a grind, you'll turn it into a grind, and your results will reflect it. Psychology. Well, trading's one thing. If you're just lucky and you learn quickly, and then you learn the psychological skills quickly, you could theoretically become a profitable trader within 6 months. But that you'd have to. But the problem is that the more you mature, you just start to get more and more and more and more information as you go along. So as you read news, and you do occasionally read articles or whatever, and you see how stocks move on certain types of news, you just get a feel for it. You just get an inkling. So obviously you don't know that every trade is going to work, but if you see a perfect setup and the markets are perfectly, aligned to you, like, i.e., say the markets are all, you think they're at a massive resistance point, there's a lot of bad news going on in the world, and they're up high, and they're at a good, they're making a nice pattern over a short period. So it's not like, or they could be overbought, it could be a massive extension up in a stock, and you've got to be able to recognise, when you start off, you can't really tell the difference between a stock that's going to make a reversal or not, because really, the best trades you get into are reversals, and nearly every single trade I get into is a reversal, Sometimes I might take a little scalp, meaning that I'm looking for a little bounce off a certain level. But the thing is that when you get a super, super strong level and a super, super high probability of it making that reversal on that level is usually a really strong level as well. It's usually not going to break it, and it's such a high probability of working because it's such a strong level, that it's going to reverse there and basically, could even be never going back there for a couple of months or even, and when you hit those on a nice, I'll show you the charting stuff in a minute. So, but anyway, so this is the start of the day. This is a long video. This is a long video, but I hope I can get you somewhere with this. So I'll try. I don't want to look at the FTSE. I want to look at the American. So anyway, let's just look at some news here. What's going on? Oh, I can look at news on FinViz here. So anyway, I would look at that. I'd look at the headline. This is saying FTSE. I don't know why. I think I've accidentally clicked on something there. But look, but global equities struggle as coronavirus fallout and rising UK death toll continues to grip investors. So there you go. I mean, that's telling you. That's giving you a little bit of information. Obviously everybody knows what's going on in the world, but to see it from these media posts, it doesn't, your own ideas about what's happening in the world or your own feeling about the market, suddenly you get other people's perspective, so you get more of a objective kind of view of the world and what's going on. So look, European stocks fall on a grim economic forecast and EU failure to agree to a pandemic recovery plan. So look, there you go, another very key bit of news for Europe, So this is not like, a meteor's hit the Earth as well and we're all going to die in 10 minutes. This is, a hurdle, the word grim economic forecasts, it's showing signs of, people feeling that because everyone's not working, it's going to take such. It's a perfect news play. What's going on now with the coronavirus? It's a perfect news play because this is the type of stuff you factor in, when you're making a decision. So if you're getting in a stock and the news is saying, it's bad, the last bit of news was 2 days ago and it was bad news, then you know that there's been no good news since that bad news, and on that bad news it might have dropped a little bit, or it might be, it might have started to show signs of dropping down anyway, So you look at this, so you look, okay, that's Europe, but obviously I'm trading American stock. Which stock markets and asset exchanges are good on closed Friday or Easter Monday? No, it's weeks that are closed on Friday. Blah blah. What's that talking about? Let's have a look. Okay. So let's go to FinViz here, and I can look at news on here as well. This screener costs £30 a month, but it's good. It's just the way you can look through stocks. It's not like any other way to look through stocks, because instead of having a million screens, you've got all the charts here, and that is the finest gold digging tool that you will come across. This FinViz, look at it, it's all there. So anyway, let's look at the news quickly on FinViz. No need to overcomplicate. I can even, if I'm in a stock, that's the other thing. Once you've entered a stock, you basically know where you're gonna, you know your rough target and you know your stop loss. So once you're actually in a stock, you can actually take a sit back. You have to have the main markets open there. So you have to have the SPY in front of you, maybe a couple of other indicators like, I'll show you what I use, but Okay, let's have a look. Education shares slide 9% pre-market after company uncovers fraudulent sales accounting, blah blah. Dick's Sporting Goods to start furloughing employees. There you go. Barclays says equities will be higher by the end of the year. So there you go. There's Barclays predicting a reversal there, basically. Coronavirus, more than 9 million expected to be furloughed. COVID-19 cases in Italy, 1.43 million cases. Blah. Third of US renters didn't pay rent. Stock futures wobble. Stock futures wobble after a bout of volatility. So let's have a look at the futures here, and then let's have a look at the SPY and see. I'll tell you where I think we are today, and how it's a good place to. So there we go. Look. So we got a bit of green there on the futures there on the S&P 500, Nasdaq, and Russell 2000 there. So that's nice. Nikkei as well. The euro, you can see that euro stocks is that's something to do with Europe is bad. Obviously reading that news, you can see that it's reflected the news, the problems in Europe there, and then the volatility, the VIX there. So I always run to America when there's problems in Europe, because that's why I trade the American stock market. And when there's problems in Europe, I just run to the American, and look at what's going on in the markets. And then when there's problems in America, I just, I'll be thankful to be in England. So I'm a fair weather friend, but I shouldn't be. I should be more. I should have a stronger work ethic and be there, through the sun and the rain. So anyway. S&P 500, so that's looking good. The futures there, and the VIX is obviously volatility on the right, but that's giving us, the feel of it's showing us a little bit of positivity for the day. So obviously we've seen this reversing here. It was hard to trade. You see that third candle back. So we got that one, the candle there, which was yesterday, which is just, closed down at 265 there, and then before a green candle, then before that a red candle, and that was difficult to trade there. See, the April the 3rd, it wouldn't be April the 3rd, but it's, the third candle in April there, it's so hard, because it's dipped right down to 220. 220 was a brilliant level, and I'll show you, look, I can even show you exactly why now. See 220 there? There's historical resistance, very strong resistance at 220, and it bounced off it, It's like people give all these different reasons for the market's moving, and sometimes you look at this SPY and you see that the reason the market, it was so hard because look at those gaps down, those red candles on the SPY there. They're gapping massively, and when they're gapping massively like that, you don't expect it to shoot back up again. And it has. This is a weekly chart. But it has shot back up again. So if that was a 2-minute chart, then I wouldn't have, that would be unlucky to lose that if you shorted it at 220. But anyway, I'm really going off on one now. But it could even be the monthly chart 220. Let me get to the monthly chart here. I think it is the monthly chart. Okay, there you go, 220. Look how significant it is. See 2016 there. Look against 220. Look how much of resistance at points it was. Look, for 2 years, from 2015 to 2017, it wouldn't go above basically 220 was the next round kind of number. It was going around 200 there. Look at the way it's dipping below 200, 2015, 16, and then it just crept up. 220 is a massive support area, and it bounced off there. So Trump, people talking about why the market's moving, all you have to do is just open up a stock chart and look at it, and this is how you read all the stocks. You look at them on any time frame. So look, I was looking at it when it was down at 220, and I knew it was a reversal. I knew it was a good, strong support point for the SPY, and therefore for the overall markets as well, that's how good the charts are. That's how much you can. That's a prime example of price. Movement of the market based on prices, based on round numbers. So let's. I'll show you what I mean then. So I want to have a look with the SPY. So I want to get a feel for the start of the day. So say I was trading at the start of the day, okay? Say I wanted to trade at the open. I want to look where this is now. So look, it's actually, this is a daily chart now. So the last however many days, 10 days or whatever, it's gone up, shot up to 260, it's come down to 250 there. And then it's starting to create this kind of pattern. So you can see that yesterday, the green candle went up to 265-ish, and probably not coincidentally, when it came down yesterday, it ended up at 265, which is like the top of that. So it could drop down to 260, 250, or it could. I don't really think, it doesn't feel like it's going to shoot up. It doesn't, because it's not like the coronavirus has been completely eliminated. People are still losing their jobs. The economy is still suffering massively from all the economies of the world. It's almost like a Great Depression could be upon the whole globe. But I think there's a little bit more optimism. But look, I mean, it's recovered a lot from 220 up to 2. It's been making big moves up as well. So to be honest with you, I don't think we're looking for a big shoot up or a big move down. I reckon it's going to be. The volatility is up. Let's have a look at the 15-minute chart here. Obviously, if I was going to trade the SPY, I wouldn't trade it now. Well, 265. You can see that it did closed at exactly where it closed the day before, but obviously being above that point rather than below it. So, it showed a bit of weakness yesterday. So, it gapped up, but throughout the day it showed the weakness. So April the 6th, it gapped up above all those levels, 245, 255. Obviously, one of the main points that people do point out is that I forgot what I was going to say. Oh, you look at all the timescales on the chart and you match up everything. You look at the daily chart, you look at the 3-minute chart, to get your entry, and you look at the 15-minute chart, which is this chart. So it looks pretty bearish yesterday. We'll have to see what happens at the open. It doesn't really. It's quite. There's a big sell-off at the end of the day there. It's not looking too bullish or bearish, so it's looking kind of mixed there. You have to check for the open to see what happens. But let's look at these stocks. So I'm gonna go over some stocks and just analyze them. I know, hindsight trading is easy or whatever, but I'm telling you, when I'm looking at these stocks in the day, most of them I pick, they work anyway. Most of them that I pick work. I'm consistent. So, I was looking at the markets yesterday. It was difficult because it gapped up. You can see that it gapped up on the SPY. I showed you it gapped up, and then it just carried on going down all day. It was just difficult to know where to, find those reversals. Like I was saying earlier, that I like to find reversals in charts. See, AKER went up near $9 there at the start, and that could have been a possibility for a short, but it didn't get up to $9 there. But possibly on the way down for that. Obviously, hindsight again, but let's have a look at what was going on with that chart. Because when you see these big, stocks that make big moves up, that might be on extra volume, you can, if you think that's going to come down, you can get in on the way down on these kind of moves, you know. I mean, if you look at so you look at the situation. So April the 6th, what happened? Something happened. So let's have a look. April the 6th, look, 9:25 a.m. Binance announces progress in its vaccine development. Oh, well, there you go. Vaccine for COVID-19. You know, it's all there. It's all in front of you. It's all in front of you. That's a very hypey kind of stock as well. You know, that's something that people will gravitate towards based on news. So that's why we've got all that extra volume. You know, average volume 1.73 million. Yesterday's volume 35 million. But all these, you know, these guys are these people are buying it. Yeah, some of them are just buying it randomly. But people are trading it, you know, and you look at the pattern. So very important to look at this pattern over the last couple of days. I mean, it completely failed yesterday, as you can see, but that's what the main markets did, didn't they? The main markets were up at the start of the day, and then they they went down. This is interesting. This is a kind of good stock to short, and I'll tell you why. Because it's got so many red candles, you know, it just loves going down, this stock, and look how much it's gone down from, you know, and even when it spikes up here, you know, that's a really strange pattern to see when it's coming over to the left a bit. Oh, bugger it. It's a strange pattern to see because it spiked up and it didn't show any recovery, you know. Normally, if you see in the middle of there, in the middle of this, you know, there's that spike up and then comes down to exactly the same level at $10. And it's very strange the way it just went up from 10 and then went back down exactly to 10 and didn't break it, and it didn't carry on going up, because that movement in the middle there, I would have definitely bought that off 10. So just before there, I'd have definitely traded that, you know, because it's, when it makes a move up like that, you're thinking that's a sign that it's, you know, it's going to start catapulting up. But this stock's interesting because it just loves to come down. You know, it's got a lot of weakness. Even when it gapped down below $4, it didn't show any type kind of, you know, rebound. It just carried on. It's just pathetic. Look at it. It just droops down and then just suddenly, you know, they're getting all this stuff for the, you know, COVID-19, but people have been trading this stock for ages and they know that it's like this, you know, and look how much it's going up. So this is a good candidate to find somewhere to short it, you know. I mean, it would have been hard. I'm thinking possibly around here, not there. Let's go back a bit and have a look at this. So you see it's at $8 there. Yeah, this is interesting, because that news came out on April the 6th. Look what happened at the end of the day on April the 6th. It went down, you know, after 2 p.m, people lost interest in it, you know. It did go down, so it showed weakness there. It's not like a complete torpedo going up. So have a look at the news on April the 7th. Registered direct offering at the market and the Nasdaq. So there's an offering there. And that means they're going to take money from the market, you know. I think. Let's have a read of that. Okay, let's have a look. $4.6 million registered direct offering. Healthcare Information Technology, that's an agreement with several institutional and accredited investors for the purchase and sale of 766,000 shares of the company's common stock at a purchase price of $6 per share. Expected to occur on about April 9th, 2020, subject to. So it looks like they're going to, take money out of the market there to fund their, fund the growth of their company. And obviously they've announced it, but it's still gapped up. So, you know, that news didn't really You know, it didn't seem to. Yeah, it's the chart that does everything. So I think just as it was dipping here, yeah, right there. I'm gonna finish this video in a second, but I think you could have shorted it below $8. The reason I'm saying $8 there, like $7.99, as it had dipped below. So once it, after 10 a.m., once it started dipping down and going up, dipping down, going up, I think you could have caught it literally if you'd have seen it. Oh, bugger it. But I mean, it's too volatile anyway, you know. I mean, it's moving so much. It's moving from like, you know, nearly 40% in an hour. The stock, you know, it's ridiculous. And so the spreads would be really high. You'd have to take a really small position, you know, because the spreads would be very high. If you put your whole account into that and it spiked up to, you know, you might lose 15% of your bankroll, you know, or yeah, probably about 15%. So my max drawdown is 3%. So, you know, but obviously you can take a less amount of shares. If you've got a massive stop loss, you know, 20, you know, 30-cent stop loss, you just figure out what your max loss is, and then you know, buy the appropriate amount of shares, which might be a very small amount compared to what you normally buy. Then obviously, if you're thinking about covering at $7, for example, then obviously you're looking to make $1 per share. So it warrants taking that big spread, you know, and so the spread will be large, and probably, you know, it might tighten up at certain points, but you know, there's a million things to learn, but it's not really a million, and it's all there. It's riding a bike. It's very much riding a bike. You know, you got to know where the brakes are. You got to know where the chain is. You know, the derailleur. You got to know how the brake pads work. You know, and then once you've got everything working, you just learn yourself. You know, you watch YouTubers. You know, some of them talk rubbish, and a lot of them are just not telling you anything. Most of them don't tell you anything about actually trading. You know. And even they'll talk about patterns, or I've got this pattern's amazing, and then they'll talk about themselves for an hour, and you know, they haven't really told you anything about practical ways to, you know, approach trading, you know. So anyway, I'll try and do more videos in the future, but this has been a good, very long, arduous overview of news, really, how news affects movements in markets. So you can look at different stocks now and you get a history. So I'll just quickly go through any stock. So I'll find a random stock here. I'll just click on any stock. You know, next video I'll talk about screening. So I'll talk about how to actually find them in the next video. So the news bit is kind of the boring bit, getting that, you know, in the main markets, getting that out of the way. And there's things that there's a lot of different things that if you don't know about, you have to learn about. You know, like candlesticks, for example. If you don't know about candlesticks, you are at the beginning, you know. But it's basically, the main thing is price action. The main thing is the price action. If you can pick it up at 440 down at the bottom there and sell at 460, you've just made, you know, well, not 440, but 448 or whatever, 443. You get up to 458, you know, you've just made a 15 cents per share, you know, off a move like that. And that's not happening due to news, is it? That's happening at 3:30 in the evening, you know. And all these moves that happen during the day, they're not, you know, they're a result of price action, price movement, you know. Look, DVN there, look, $10, look. I mean, it went above it, but it did reverse at $10, you know. Let's have a look at that, and I'll just look at the news quickly, and then I'm going to finish the video. So that's the only point I wanted to make out, is that the next video I'll talk about more about price action, how to find them, how to find the stocks, you know, what's the method to use to scan through the stocks on this software, Finviz, on this website, so that you can literally have hundreds of stocks right in front of you that you can just glance at, basically. You haven't got a watch list of 6 or 7 or 8 stocks. You've got the whole range of the market with the price, the price of the stocks you want to buy. Obviously, you have to sort out a method for a max drawdown, and I do that with a stop loss. So if my stop loss is basically, I've got it here. If I've got $1,000 account, I've got 6 times buying power. If my stop loss is 4 cents, I can buy 666 shares. If my stop loss is 5 cents per share, I can buy 600 shares. If my stop loss is 6 cents per share, the higher my stop loss, the less amount of shares I can buy, and then I've got a max drawdown, and that ensures that every single trade I take, there's it's the same risk. I'm risking losing the same amount on every single trade. Not how much I make will be different, but anyway, you can figure that out, But anyway, let's have a look at this then. So look, this base materials, oil and gas, got a lot of correlated stocks here, so you can have a look at them and see what's going on with them. Are they looking bullish or bearish? Are they making the similar types of patterns? That looks pretty bearish there, Let's have a look. Obviously, towards the end of the day, let's have a look. Look, March 25th, 2020, downgrade. So it's being downgraded amidst the, turmoil in the markets. That's not good. That's not good. Dow Jones, look, and that was March 25th. Dow Jones down almost 400 points following this point in March jobs report. So it's something to do. What is this? Oil and gas. Dow Jones Industrial Average. Devon Energy. Is this Devon Energy? Yeah. Devon Energy further cuts 220 capital spending by 300 million. Cutting spending, It looks like shrinkage. But oil's been going up. Yeah, I was going to say. Oil's been bouncing up. So this has got a lot of bad news. But it's in the oil sector, and oil is, so low now that it's starting to reverse. And I tell you what, you could have shorted that off $10. Definitely, you could have taken that. I mean, you could have shorted. I mean, this is at the start of the day. You can think, okay, what's going on with oil? Where are we at with crude oil? Look away. It just reverses off 10. I mean, yeah, it did spike above it. No, that's what I was talking about. But it reversed off 10. It reversed off 10, and I'm not sure that I would have definitely taken it because it was very early on in the day. And if you look at the trajectory of this, I'm just going to do this and then I'm going to stop, okay? Because this video has been way too long. You want to look for, super strong level $10. The reason why it reversed there's a massive gap there. There wasn't enough excitement. There wasn't enough buyers in this stock to make it, go up. And obviously, as we've seen, there's a lot of shrinkage. I'm just making that up, but downgrade March the 25th. Disappointing March jobs report. It's not good. It's all kind of slumping oil. It's bad, isn't it? And then it's going up. It's going up because the oil's rebounding. But you take these things into account. So it's got the conflicting stuff there. It's got the oil prices bouncing back, but it's got all the bad news going on with it. And then we've got the chart as well. What I was going to show you quickly, and then I'm going to stop, is this. When you look at patterns like that, you want to get the. Basically, what I'm saying is, you don't want to short it, and then it goes up another 50 cents. Because you feel like when you make a mistake, when you make a trade that is really bad, it kind of knocks you down a bit because you think, well, I was going to short it there, and it's just carried on going up and up and up. So how bad was my judgment on that stock? So what I'm saying, why I might be a little bit worried, because it's the start of the day as well. So it's the start of the day. It could be a lot more. It could have easily been pushed above 10. If you look at the kind of trajectory of that, you could think that, well, at the start of the day there, if it keeps going like it did, look at the line, look at the moving average. It's about the same. It's kind of, this line I'm drawing is kind of parallel to that moving average. So that's giving us the kind of, look, you see there, it matches up with a lot of candles. Look, right at the bottom there, well, right where it is now, and then that's kind of a trend line going on there. There's a lot of touches on there. So you're looking at the trajectory, and obviously, if I want to short it at $10, well, if I put this up at, you know, the top of that candle there, you know, it could go up to 10.50 if it was doing the same type of thing. And obviously, this is the kind of stock. Some of the stocks you see, you can short at $9.99 and put a stop at $10.01. But you couldn't have done with this stock, because obviously, if you'd have done that, you would have been taken out straight away. And why can you do that with other stocks and not with these stocks? Well, that's in your ability to absorb the information and absorb the movement of the chart and the volatility of the candles, you know. And you can find those brick walls, but they're not brick walls. They're kind of you know, a brick wall isn't a good way to describe it, because when you see a stock sticking to a level, you think, okay, it's dropped down, it's sticking to this level. Sometimes it will bounce up, but most of the time it will break it and go down. You know, if it's sticking to a level, it looks like a brick wall, but it's actually very brittle, you know. They're not brick walls, they're basically like, if you imagine, you know, someone with their fist out, and you just like... No, what am I talking about? They're more like... Okay, so they're impenetrable parts of the wall. So they're parts of the wall that have been reinforced, you know. And what I mean by that is that there's so many orders there ready to buy, you know, or even above that level, that if it hits that level, it looks like the amount of people that are going to buy there is just going to far exceed the people that are going to sell, and therefore it's not even going to get over it. It's not even going to break it. And this one, obviously, yeah, you know, it did break it. It was near the start of the day. You know, that's one thing you take into account, because obviously you got that extra volatility at the start of the day, and people, all those shares trade. So, you know, you want to get the nice reversals that you see, that just everyone, you know, seem to be so insignificant on the chart, but they just work over and over and over and over again. You know, I wouldn't be putting this much time in, you know, and this much of my life into this trading stuff if I didn't think that it was gonna you know, sort me out for the rest of my life, basically. So look, AMRN, it showed some weakness up there. Look, you know, went back up to 540. You know, you might have shorted that, and then it goes down to 530, you pick it up, and then it goes back up to 540, and you think, oh, I'm glad I got out of it, 'cause it's gone back up. But then, you know, look what it does at the end of the day. And I say 540 arbitrarily there, because I haven't even seen anything on the chart, but I'm assuming that where it starts showing that weakness at 2, 3 p.m. there, it was, you know, the chart was saying something about it. I mean, April the 3rd, the 6th there, you know, it dipped down. It's not showing major... Yeah, look at that. It should. That looks like it's going to break it. It looks like it's going to break $5, to be honest with you. You know, I wouldn't have wanted to short it at 540 there. Maybe, who knows. Anyway, next video I'll do... You know, it's a possibility. It was showing weakness at the start of the day. I mean, yeah, it is a possibility, really, because look, if you look at 9:30 to 11 a.m, it was it went up a bit, and then it started showing a lot of weakness. Went down to 480. Look, and then for some reason it just reversed, and that wasn't, you know, that wasn't really nothing to do with news, because the news will have already come out. Well, look, no. April the 6th. Well, what was this? This was April the 7th. So this was April the 7th. This wasn't even April the 6th. If you look down at that news, April the 6th, that news came out. But that was, you know, this was April the 7th that this day occurred, and there was no news about it. Obviously, I had the news the day before, so there was stuff going on with it. But, you know, this is showing you an example of recent price action, which you can take into account. So, from, you know, this is showing how much information the chart's giving you. Up to 11 p.m, it looked like it was going down, you know, and then suddenly went right up to 540. Started struggling, you know. So I think you might have been able to short that at 2:30. I think you could have. I mean, you would have found it difficult, but I'm telling you, okay, this. Okay, you see after 2 p.m. that red candle dips down, right down there. That's showing a lot of weakness, you know. But it is low down, this stock. It is very low down, you know. you look at that daily chart, it looks like, you know, you don't really want to be shorting stocks when they're that low. That's the only problem, you know. So you know, I probably would have stayed away from that for that reason. But what I'm trying to tell you is this spike down just to the right of that crosshair there, that spike down, you know, and the way it moves down, you know, move along a little bit. Okay, you see, just before 2 p.m, it kind of, you know, starts and then it drops. Those three candles, it like goes off a cliff, doesn't it? It drops down, then it reaches back up to 540. But because of that drop at 2 p.m. there, you know, that's a good sign of weakness, you know. But where it reaches back up, this is where you want to get the shorts. You want to get it where it looks like it's reaching up for this one last ditch attempt, because that's a brick wall at 540. Obviously, it's not the most obvious, you know, impenetrable part of that brick wall, but it is one because it didn't break it. You know, if it wasn't a brick wall, it would have broken it. But it was a brick wall. That's why it hit 540. And I'm saying 540 because 540 is a round number. You know, all these stocks trade off round numbers. Look at 530. Look how much it's hit exactly 530 there. You know, they move in round numbers. Anyway, I'm going to finish this video now. Hope you've got a bit out of that. I'll see you later.